And let's have a look at the markets then, because we are trading at the day's lowest point. Almost 180 points of cut is what we are seeing, and even Nifty Bank is seen to be trending lower. But in the last 10 minutes or so, the number of companies that were actually holding on to the gainers list of Nifty 50, that has actually declined, and just a handful of counters that are left to be on the green side. But on the flip side, a lot of these financials name, some of these names from the banking majors, and even stocks like Apollo Hospitals are seen to be a bit under pressure today. But amidst this volatility, how should you place your bets, and what should be the outlook for 2025? What should be your strategy? Let's try and find an answer to that. And for this, we are being joined by Naveen Kulkari, who is the CIO at Axis Securities. Hi, Naveen. A very good afternoon and great speaking with you. First up, help us with your market outlook then, because 2025 did start on a decent note, but just a few days from the new year, we are seeing a lot of volatility that is kicking in. Where do you see the markets headed, and this particular weakness that we are seeing, at least in today and in the recent while as well? What factors would you attribute that are leading to some this sort of a decline?
Okay, so good afternoon. Let's think of markets in terms of two broad aspects. One is with regards to the macros, right? The global setup, and also with regards to what's happening with the expectations on earnings for the corporates, right? So these are the two broad aspects which are driving the market, right? When we look at the overall macro scenario, one thing which, of course, we've seen is that the US markets, we've seen that the interest rates, at least the bond yields, have gone up significantly, right, over the last. So obviously that is causing a little bit of concern. And overall, whenever we see that the bond yields tend to rise, we see that there is a compression of multiples, right? So that's one major factor. And also from an Indian market perspective, what we are witnessing is that the slowdown that we saw in quarter one and quarter two, quarter three seems to be slightly better, but of course it's not seeming to be significantly better, right? So those are the three, four factors which are weighing in on the market. So what we are witnessing right now is an overall compression in multiples for the market. So beginning of the year, the market did rally very, very well till the months of July, August. Thereafter, we have started to see some bit of compression in multiples because of earnings pieces. Having said that, we are right now probably we would see this kind of consolidation happening. But overall, from a perspective of, let's say, 2025, we will still see earnings improving. Quarter one of next year will be quarter four, quarter one sequentially should start improving. And of course, we will see markets delivering a return of around 10 to 12% in the next 12 months, right? So that's the broad outlook with which we are working, which is probably in line with earnings growth. And of course, if we see that there's a bit of earnings surprise which happens in the later part of the year, the markets could deliver even better returns. So that's the broad outlook that we are working. I don't see huge downside from current levels, but yeah, more of a consolidation activity playing out over the next, let's say, 1.5 months.
Right. Hi, Naveen. This is Ankita also joining in. Good afternoon to you. Naveen,
Right.
we had the GDP projections yesterday, which of course came in at 6.4%, which is the lowest since, so lowest growth rate since the pandemic. So the economy has slowed down. The demand is still a concern. And also we are kickstarting the earnings season. Now the earnings season is also nothing to write home about, right? This earning quarter also. So from when can we see that revival happening? Have you already priced that in? There will be therefore no further downside as far as the markets are concerned, because we have already priced that in. Or how are the markets likely to react to now? Post we are getting into budget also and this earning.
Yeah. See, let's put this in perspective, right? So one we are talking about the slowdown in GDP growth rate, right? That's one aspect. And then, of course, we are also looking at corporate earnings, right? So these are two aspects which don't necessarily play out in a similar manner. They have various aspects which play out at different points in time. So GDP growth slowdown is a slight concern, but let's say a 6.5% to 7% number is still a very, very decent number, right? And also when we look at it on a sequential basis, probably going ahead, Q1 of FY26 will start looking much better on the base that we have, right? Because Q1 of FY25, there were elections, there was slowdown, so many factors played out. Q2 was even slower, right? So from Q2 of FY26 will look even better. So the broad point that I'm trying to make here is that how it optically looks and what is the actual number is also has an impact, right? So the point that I'm trying to make here is that right now we are seeing that we were relatively on a very high base. From that perspective, we are seeing a slowdown, and going ahead, the base will get a little better. So numbers will start looking much better. That's one aspect. Second aspect is with regards to corporate earnings. Last 2 years, if I were to look at the largest component of the market, which is the BFSI sector. That was a sector which was seeing very, very low credit costs. And of course, it was coming out of a very, very bad stress cycle, right? So the corporate earnings for the BFSI sector were very, very strong. So which is already there in the base, but we're still growing on that base, right? There are few areas where there are some bit of concern like microfinance and some bit, let's say MSME. But overall, I would still say that the corporate earnings for the BFSI sector are still going to grow, albeit at a slower pace. Point that I'm trying to make here is that when that numbers will start looking better, I believe that Q1 of FY26 is where those numbers will also start looking. So broadly speaking, this is where we are. This probably will be one of the slower quarters in terms of sectors like BFSI, maybe consumption also. But sequentially, we are likely to see improvement. And once the earnings start trickling down, once the earnings season start, I would say that we are likely to see a little more optimism coming back, and the market should start doing a little better from here.
Naveen, that's great to have your take specifically on the BFSI sector. But when I see your Axis Securities top bets for 2025, the names that pop out on the first list is Shriram Finance, where there's more than 30% upside that you guys are working with. Help us understand the structural shift that you see in Shriram Finance and what is the rationale that you're working with?
Yeah, so I run the PMS business, so I won't be very, very specific from stock perspective because we tend to hold positions in some of these names. So broadly speaking, BFSI as a sector, if I were to look at it, and that too, if I were to look at the NBFCs as a space, NBFCs, I would say that the quarter 3 updates which have come out, let's say for what has come out from Bajaj Finance, and also the earnings preview which are coming out from various brokers as well as us. We believe that the numbers look reasonably okay to us. Let's say Bajaj Finance is talking about reasonably strong quarter in terms of the disbursements that we are talking about. And also, if I were to look at some of the other names, let's say talking about Shriram Finance or Chola or other names, we are seeing that the growth rate is still reasonably strong. Shriram Finance also has some bit of advantage of having relatively reasonable valuations compared to some of the other names. Also, the company has become fairly large in size, and at that scale and that where the company can deliver reasonably strong numbers and the return ratios are quite good, the scope for upside for a stock like Shriram Finance is quite significant. Right. So broadly speaking, what plays out well for Shriram Finance is the growth. Number two is relatively reasonable valuations, and number three, if in the next 12 months we see that the cost of funding were to come down a little bit, the amount of I would say that the uptick which can happen in earnings can be very, very significant. So a company like Shriram Finance can deliver a 20% plus earnings growth, and with relatively cheaper valuation, some bit of re-rating potential, upside potential of let's say 30 to 40% can materialize in a stock like
Naveen, finally, the stock list that I have for you, I didn't see an IT name there, and in fact, IT has been one sector that has, really outperformed and held its fort even while the markets were down. It has already moved up 25 odd percent, and the way Nasdaq has, of course, performed, it has been, IT has been in a good stead. Now, is it time for, for it to moderate, for profit taking to take over, or do you see more steam left in the IT counters?
So, IT as a sector, if you look at it, there are two aspects which play out for the sector. One is it's kind of a defensive sector in a lot of ways, because the quality of companies in that sector is extremely high. Most companies tend to have extremely strong cash flows, and also, let's say, the dividend paying history plus buybacks, so on and so forth. Everything plays out for IT sector very, very well. So whenever there is a little bit of uptick versus the expectations which is there, that's when IT sector delivers very, very strong performance. And of course, dollar also has a player. So what has happened in the last 6 months is that the quarter two earnings for IT sector was slightly better. Quarter one was, of course, better than expectations, and of course, the dollar tailwind has helped. I believe that we are coming to an end of those things. I don't see a positive surprise for IT sector at this point in time. Also, the dollar tailwind to some extent has played out. I don't see further tailwinds with regards to the currency. So from here on, IT sector should be a market performer. I don't see the sector performing significantly ahead of the market because of two reasons. One is the tailwinds which were there; they seem to be factored in. Second aspect is valuations, I believe, are fully capturing in the positive. So from these levels, it will be more of a market performance. So some bit of profit taking can be looked at in the IT sector at this juncture.
Right, Naveen, with this, we let you go on that. And thank you so much for taking the time out and speaking with us, and also helping us with your market outlook. But with this, viewers, let's get back to the stock action.
If you like this video, then like, share and subscribe to ET Now.